How to start investing in US stock. Most people hear the words US stocks and immediately assume it's something reserved for wealthy investors, people on Wall Street, or individuals with huge amounts of money sitting in their bank accounts. But what if that assumption is completely wrong? Because right now, something is happening that most people are still not taking seriously. In the next 30 seconds, I'm going to break down what stocks actually mean in the simplest way possible, and in the middle of this video, I'll also show you 5 evergreen US stocks people quietly use to grow wealth long term. Not because they are popular, but because they are built on strong businesses that survive every kind of market condition, and some even reward investors while they wait, through dividends. You can start investing in some of the biggest companies in the world, with very small money, and in a moment, I'll show you exactly how that works, step by step. Forget everything you think you know about investing. Forget complicated financial terms. Forget charts. Forget Wall Street language. Because the truth is much simpler. A stock is not complicated. A stock simply means ownership. For example, if you buy stock in Apple, you now own a tiny piece of Apple. But here is the downside most beginners never notice. Some good-looking stocks actually behave in a way that can slowly destroy people's money over time. That's where most people get it wrong. If a business is divided into small pieces, and you own one piece, you are officially a part owner of that business. But here's where things start to get interesting. Because not all companies behave the same way. Some quietly grow for decades, and others disappear faster than people expect. Now here's the part most beginners never hear early enough. Not every company is worth your attention, so the real question becomes, how do you find companies that can survive for years, even decades? To keep my promise, you look for what I call life cycle businesses. Because these companies are not just businesses, they are tied to human behavior itself. And once you understand this pattern, investing stops feeling random. It starts feeling predictable. Think about it. People still use phones. People still drink beverages. People still use software. People still shop online. And as long as that doesn't change, certain companies will continue existing. Let's break it down. And keep watching, because the last stock might surprise you the most. Apple. Everyday technology habit. Apple is not just a tech company. It is a lifestyle company. Because once people enter that ecosystem, they rarely leave. Phones, apps, payments, entertainment. It has all become part of daily life. Now here's the interesting part. You don't need to buy a full share. You can own a fraction of it, using platforms like Bamboo. But Apple is just the beginning. Because the next company runs something even deeper. Microsoft, the invisible infrastructure. Microsoft quietly powers offices, schools, and businesses across the world. At the time of recording, one full share trades above $400. Most people use Microsoft every single day, without even thinking about it, and that's exactly why it's powerful. The next company we're about to look at is something you interact with daily, without realizing how much value it creates in the background. And interestingly, it's also one of the more accessible stocks, compared to the others. Coca-Cola. Human consumption never stops. The Coca-Cola Company has survived for over a century. At the time of recording, one full share trades around $60 to $70, relatively affordable compared to other global giants. Not because it is trendy, but because it is simple. People consume, even when economies struggle. Consumption doesn't stop, and this company has something many investors love. It often pays dividends, meaning it shares profits with investors over time. At the end of the video, we'll tell you the most reliable US stock to buy. I will advise that you buy it immediately after this video, because in 6 months to come, it will double in price. Amazon. The convenience economy. Amazon is not just an online store. It is part of a global system of convenience, fast delivery, online shopping, cloud computing, and digital infrastructure. At the time of recording, one full share trades around $180 to $200. But here's what most people don't realize. Amazon is not just growing because of shopping. It is growing because convenience has become permanent human behavior, and that is what makes it powerful long term. Now, step back for a second. Some of these companies are expensive. Some are fast moving. Some are slow and stable. But here is the real shift you need to understand. You're not trying to buy a full company. You are building ownership slowly, over time. That is the entire game. And there's one rule that protects beginners more than anything else. The companies people talk about the most are not always the safest. The strongest companies are usually the ones that survive quietly in the background, because popularity changes. But strong businesses survive, and some of them even reward you while you wait, through dividends. But here's where things get even more interesting, because knowing what to buy is only half the story. The real question is, how do people actually start investing with small money? And that's where most people get stuck. But how do I actually start? Here's the surprising part. Starting is easier than most people expect, because today, platforms like Bamboo allow people to invest in US companies directly from their phones. No complex systems. No need to live in the US. No need for large capital. Just a simple setup process. Tap 1. Create an account. You sign up using your basic details. Email, phone number, and personal information. Step 2. Verify identity. This is a normal security step that helps protect your account and confirm your identity. Step 3. Fund your wallet. You add money using your bank. Once it reflects, you are inside the system. Step 4. Buy your first fraction instead of buying one expensive full share. You buy a fraction based on what you can afford. That means even small money, and give you ownership. And at this point, you officially become an investor. Now let's end with something important. Investing is not magic. It is not luck. It is not speed. It is habit. Nobody starts as an expert. People learn, and over time, something powerful happens. Small, consistent actions begin to build something bigger than expected, because wealth does not grow instantly. It grows slowly, through patience, through discipline, through consistency. You don't need millions to begin, you just need to begin. And if you understand that early, you are already ahead of most people. To fulfill our promise, NVIDIA is at the center of artificial intelligence. Every major AI system relies on chips and computing power, and NVIDIA sits directly in that supply chain. Please, this should be one of the first stocks you should invest in. At the time of recording, one full share trades above $100. But here's the warning most beginners ignore. When a company grows this fast, it can also move unpredictably. And that leads to an important lesson. Not all strong companies move the same way.